Hello, good afternoon and welcome to MF Corner on CNBC TV 18. I'm Vinnii Motiwala, with me Sonal Bhutra as well. Sonal, we are wearing the tri-colors today. We are going to be celebrating Independence Day, but equity flows are surely keeping everyone happy as well. Look at the data that's coming from Happy, and that's what we'll be decoding.
We will be. It's definitely financial independence is what we talk about on the show as well. So let's talk about that in greater detail. We'll decode the data with our guests as well. But first up, let's talk about the numbers because it's been a month of records. Let's talk about the equity flows first up. This time around, equity flows came in at 42,672 crore rupees, which is a record number, and it was led by NFOs. But first up, what was the breakup between large caps, mid caps and small caps? Large cap flows increased on a month-on-month basis to come at 2,125 crore rupees. We've seen number higher than that before as well, so it was not largely led by large caps, but mid caps and small caps did well. For mid caps, the inflow was around 5,182 crore rupees, which is at a multi-month high. We do have the small caps doing well, 6,484 crore rupees. So again, that number is also at a multi-month high. So quickly, if we take a snapshot of all these three categories which did well, large cap, small cap and mid caps, so we have seen an improvement on a month-on-month basis as well. Now to the big number, the SIP number has been breaking records every month, and this time was no different. Markets, though they saw the decline, in fact last entire month we saw declines on the Nifty, but still the SIP number kept going. It's the DIIs who have been supporting the markets on the lows, 28,464 crore rupees for the month of July. Now, what has led to this surge in equity flows this time around? If not large caps, if not so much of small caps or mid caps, it's actually the sectoral and thematic funds which have seen some surge this time versus the last month, because there was a sharp dip in the month of June. From those levels, it has seen a sharp surge, 9,426 crore rupees. From that, if we talk about the new fund offers that came by as well, huge number. We've never seen this number ever before. So in terms of new fund offers or NFOs, the total number this month itself, that came in at 30,416 crore rupees. That was due to 30 new NFOs that came by. A lot of it was from Geo BlackRock Asset Management Company as well. They launched 3 liquid funds in the short-term debt category. They actually garnered 17,000 crore rupees from there. So NFOs, while the number was 30, which we have seen before, the absolute amount was huge at 30,416 crore rupees. That's a new record in the industry as well. Hybrid funds continue to do really well, 28,879 crore rupees in hybrid funds. It's up and away for hybrid funds. Balanced advantage funds did well, and so did the multi-asset allocation funds. So these are some categories where we are seeing that investor interest is coming back, because there was so much volatility in pure equity funds or pure debt funds, that these are the categories, multi-asset allocation, hybrid funds, which have seen a big surge over the last couple of months. So to decode the data for us, joining us today are Suranjana, Borthakur, the Head of Distribution and Strategic Alliances at Mirae Asset Investment Managers, and Sandeep, Bagla, who is the CEO at Trust Mutual Fund. Mr. Bagla and Ms. Borthakur, thank you so much for joining in today. Interesting times for the industry as well. While we're seeing the overall market going down, equity flows are increasing. But NFOs, that continues to be the big talking point. So, lady, let me start with you. NFOs are back again, 30,000 crore rupees inflows. Will this wave continue? And is it prudent to be looking at NFOs when it comes to fresh investments?
So good afternoon, Sonal, and good afternoon to all of your viewers. I think very interesting times to be talking about the NFO numbers. I mean, if you look at the YTD flows in NFOs, what has happened is about 49,000 crores of flows have come through the NFO route into the industry through some 147 schemes. So the proliferation of new schemes has been quite, it's been quite large. I think if you break down the July number, if you look at that 30,000 crore number that you are talking about, actually, as you mentioned, about 19,000 crores out of that is actually in 2 debt schemes. If we leave that out, you can probably see a larger number of NFOs which have come in the equity side, about 10 NFOs that have come in, which have garnered about 9,000 crores. Out of this, about 7 of them were thematic NFOs, which collected about 7,500 crores. Now, the multi-asset is the other category where one NFO actually garnered a decent amount of AUM from the industry. If you look at what is going to happen going forward, I think when it comes to differentiated ideas, there is always an enhanced interest from the investor side. But what is important from the investor point of view is probably, if they can align their long-term goals with the kind of products that they're adding rather than just, chasing the short-term trends in the industry, that will be a very prudent thing to do. And I also think that, unless a fund is really needed in the portfolio, it should not make it to the portfolio. A lot of times we add a fund in the portfolio just because of the fear of missing out of a certain trend, which may not be the best way of looking at it. If you need the fund in the portfolio, definitely look at it. But just because it's trendy may not be the best bet.
Absolutely. Just because it's trending, it's not always the best bet. Sandeep, good afternoon. What's your thought coming in here as well? Do you think this wave of new NFOs, that is something that will continue? And also, apart from that, that surge that we saw in sectorial funds again, do you think that's also a safe space for investor now?
Good afternoon. I don't think that sectoral and thematic funds are something that investors should devote a large chunk of their portfolio into. In a thematic or sectoral fund, the fund tends to be far more volatile and compared to a diversified fund. The onus of entry and exit from a particular sector or a theme then falls upon the investor themselves, and they may not be the best in the best place to time the markets. While experienced fund manager can easily adjust the portfolio compared to in which sector to invest and at what time to reduce the weightages depending on the relative valuations and the prospects of the particular sector. So while this trend is emerging that there are a lot of thematic and sectoral funds, my personal view is that one should allocate only a small part, and one has to be fairly cognizant of the fact that the volatility can be very high. One sector can do very well for a few years and then be completely out of favor because of the changing prospects. So I think diversified funds are a better bet, and one should take, probably guidance from a distributor to ensure that you are properly allocating your assets into equity and debt, and within equity into the right kind of funds which meet your financial goals.
Okay, so sectoral funds only a part of your portfolio. That also you have to ensure that your risk-taking capability is as much as this particular category gives you. Coming back to you, Mr. Bagla, because equity inflows led by mid caps and small caps, not so much by large caps this time. What is the market factoring in right now here?
See, I think I think that investors, by their experience in mutual funds in the last 20 years, have learned something that if you want to capture the growth of India's structural story, then the best way to participate in that growth is through equities and probably through mutual funds, which give you a very well diversified fund with experienced fund managers and at a very nominal cost. So I think that part has been understood, which is probably leading to this higher flows. And on the question of why higher flows in mid caps and small caps, we must understand that the way we have defined our large caps, companies have multiplied in their market cap over the years. And large cap, we have restricted the large cap category to only 100 companies. Now, a lot of companies have become large, but they are still qualified, they're classified and categorized as mid and small caps. A lot of new sectors are opening up, a lot of new companies are getting listed. Most of them are getting listed in the category of small and mid caps. If you look at the indices, then the small and mid cap indices earnings growth for the next 2 years is projected to be in the range of 13 to 15%, while the large cap 100 index earnings growth is likely to be between 6 to 8% as per Bloomberg estimates. So, investors have understood that mid and small caps are the place where the growth is going to be higher than the growth in the large caps. And the immediate past experience of 3 to 5 years has been stellar compared to large caps and mid and small caps. So India being such a diverse economy and so many opportunities which are emerging in the small and mid caps, I think investors are aligning their portfolios more towards mid and small caps. I just hope that they are going to remain invested for a long period of time, so that they are able to tide over any volatility which may arise because of either global uncertainties or any periodic slowdown of growth, and sometimes stretching of the valuations in mid and small caps. So I think one should
Right.
elongate the holding period and the investment horizon, and try to benefit from the growth in the mid and small caps in a structured way.
Absolutely. So, Ranjana, what's your view also coming in on this, right? Mid and small cap, that is what is leading the flow, right? So, your thoughts on that, and also in terms of sectoral and thematic funds.
Yeah, I think what has happened if you look at the flows from beginning of this year, from January onwards, what has happened is in the equity category, the largest inflow, about 20% of the flows have happened in the flexi cap category. Followed by small cap, followed by mid cap, and also the large and mid cap category. This is keeping aside the sectoral, which is also second to only the flexi cap category. Now, what is happening is, as Sandeep mentioned, people are looking for the next big growth leaders, and which is where people are exploring more into the mid cap and the small cap space, and also since earnings, visibility is better in the broader market, so which is where probably the conviction is very high. I think within thematic, if you look at it, if you look at the kind of flows that have happened within thematic in the 49,000 crores which have come into NFO YTD from January, about 14,900 have come in thematic, which is in actually dispersed in about 23 schemes. So obviously there is a lot of chasing which has happened there also in terms of newer ideas. But what our take is very clear that, when you look at, large, mid and small, while large cap today in terms of valuation may look a little more attractive, but if somebody wants to really create wealth in India, probably having enough allocation in mid and small is absolutely essential, and which is where probably flexi cap and multi cap are great categories to look at from an entry point of view today. But from a pure mid cap and small cap, I would think that probably it's better to go in through the SIP or the staggered route. The only observation is in thematic, probably, that too much of chasing, what Sandeep also mentioned, that if the product remains as a satellite portfolio exposure, great. If you keep on chasing different trends and then they all become core of your portfolio, then the portfolio itself becomes very volatile.
Makes sense, and that's the biggest risk with sectoral as well, right? We did see that big wave coming into sectoral, but then we saw some of them reversing those returns as well. So that's the big takeaway from investing into sectoral funds. It's a very interesting discussion, but we have to get into a quick break. So we'll come back and we'll talk about SIP redemptions and the other categories that have done well as well. So stay tuned for that conversation. Welcome back. You're still tuned into MF Corner. We still have with us Suranjana Borthakur of Mirae Asset Investment Managers and Sandeep Bagla of Trust Mutual Fund. And we are discussing what's the detailed analysis of July mutual fund data as well. Let me start with you this time around, Mr. Bagla. We've been talking about those SIP redemptions number, right? And that has been huge in the last couple of months. Are we seeing an improvement here? Was this number high this time as well? Will we see an improvement in this trend overall?
Yeah, I think the periodic profit booking will happen from time to time. People have been investing for a long period of time, and those things will continue. I think what needs to be we need to concentrate on is the fact that the SIP gross numbers are increasing, and which reflects the increasing participation from retail and increasing penetration into the different pin codes in India. So I think the distribution is getting increased, and the inflows are more granular in nature, and I think they will be more sticky. So I think that is something that we need to concentrate on. Look at the situation that we are in. You have, Trump tariffs, which are threatening to disrupt the global trade scenario and supply chains. You have growth, which is slightly anemic And while interest rates have been cut and the government capex is picking up, we are expecting that earnings and will pick up in next 3 to 6 months. But equity market performance has been slightly patchy, and which is why it leads to nervousness, and people who have been investing for a long time are booking profits. But I think the trend is that the core SIP growth, which is the probably the cornerstone of mutual fund growth in India, I think that is on the rise. And I think this will continue in the future. I think mutual fund Amphi with mutual fund Sahi Hai campaign, and the very fact that people have made money steadily on a regular basis through SIPs. I think that has led to that growth. And I think today, we are talking about bank deposits and mutual fund investments in the same breath. There was a time when mutual funds were very small. We did not mention mutual funds and banks in the same vein. But I think we are now gaining ground in terms of investor attention. And like in the Western countries, the contribution from mutual funds is far higher. I think we are also headed that way. So I think this growth will continue for quite some time to come.
Okay, expecting this growth to continue for some time to come. That will be interesting to watch out for. Suranjana, what's your thought coming in overall in terms of obviously the increase that we're seeing for B30 cities, right? So this incremental flow now that we're seeing coming in, is it only B30 cities or even smaller towns and cities are now seeing a higher participation?
Yeah, actually, that's a very interesting trend again, which is evolving. If you see, in terms of B30 is definitely the growth engine for additional flows which have been coming into the industry. But more exciting to see the locations which are beyond the B30 cities. I think a lot of participation from smaller towns which have been coming in. I think, financial inclusion, I think deepening of the MF penetration, awareness of mutual fund as a product, all of these are helping in increasing the share of newer markets. But I also believe that, the digital familiarity, if you look at even from a payments point of view, like using UPI or making a digital payment, all of this is absolutely level playing field it has created for online investing. In fact, a lot of fintech platforms are actually sort of, speaking directly to the client in a language that they understand. So a lot of people are talking jargon-free things, which are, which are making the investor more confident. I feel also the distribution reach, which has expanded in cities which are beyond the B30 and T30, are actually also creating a good reach. In fact, I was just recently talking to a regional ND setup. Very happy to hear from them that their focus for new investors is actually from the cities beyond the B30, and they are actually focusing on the women cohort, where they are seeing a lot more interest for longer term investment and commitment remaining. So very interesting trend there. But if we look at the actual numbers between B30 and T30, I think if you look at the May to June growth, I think the B30, while the T30 growth has been about 3.5% in the AUM, the B30 growth has been actually 3.9%, so a slightly higher percentage growth there. If we look at the YTD growth, July last year to July this year, if we look at the growth, the B30 growth has been around 21%, whereas the T30 growth has been around 19%. So there has actually been an incremental growth in the B30. And also, I think because the underlying of the B30 AUM, if you see, almost 77% of that AUM is actually in equities. So the faster growth there is also leading to better penetration in the equity investments in MF. So I think great trends to be seen there. I feel after 2019, probably the digital penetration, the familiarity, actually having investment knowledge very easily accessible is making investors more empowered, and therefore the reach is increasing.
Take that point. Mr. Bagla, the other category that has done well, and you spoke about it in your initial answer as well, is hybrid funds. They are doing well. Do you think the volatility or the interest out of other categories would keep investor hooked to this one?
Yeah, I think multi-asset funds are getting more popular. See, what is happening is that fixed income rates have come down. Gold has performed really well, and we are, as uncertainty increases, as dollar becomes weaker, as tariffs come into effect, I think the second order effects could be inflationary, while opinion is divided whether it is going to be inflationary in the longer term or it is going to be a one time effect. My personal take, and which is supported by the long term bond yields and also the prices of bitcoins and gold, market seems to be weighing in favor that things are going to be far more inflationary than what is being understood by the people in power. So I think it's a good bet to hedge through multi-asset fund, and I hope the fund managers are able to calibrate the exposure in gold to a more significant part than the mandatory 10%. To make the character a little more multi-asset than just another equity fund. But I think multi-asset funds are going to remain here, and I think that in the period to come, I think gold will continue to surprise us on the upside.
Okay, Mr. Bagla, point taken on that note. So thank you so much, Mr. Bagla, as well as Suranjana, for joining us this afternoon and helping our viewers decode that amphitheater that is coming, as well as the trends that we could expect seeing going forward as well. But with that, we're absolutely out of time on this edition of MF Corner on CNBC TV 18. Thank you so much for tuning in. We have the last hour of trade that is still left and your closing bell up next for that.